I want to share a little bit of information with you specifically about variable annuities. Different types of annuities have been in the news recently, and I want to talk about maybe what's good and what's possibly bad about each of them. The different types of annuities that you have basically at this point to invest in are going to boil down to fixed annuities, index annuities, or variable annuities. Now with a fixed annuity, it's just what it says. You earn a fixed interest rate that's guaranteed for some period of time. Right now interest rates are low. They're going up slowly, but interest rates are low, so we're not really big fans of fixed annuities right now. If they were to get back to where they've been in the past and start paying 6 or 7 or 8% interest again on a guaranteed basis, then obviously that would be pretty attractive. But right now interest rates are just nowhere near that. You also have index annuities, and with an index annuity, sometimes there's a guaranteed interest rate, sometimes there isn't. But what is guaranteed is that you'll never lose any of your principal or your growth. Now you can earn better than guaranteed interest rates because the interest that you earn each year is going to be calculated by a certain index, and usually the most popular index that is used is the S&P 500 index, but there are a few others to choose from. And then variable annuities are kind of the third annuity that's available right now, and that's really just a collection of mutual funds inside of an insurance account. So variable annuities have the upside potential of the market, but they also have the downside potential of the stock market as well. Now, I know when you look at these three different options, some may be a better fit depending on your situation than others, but the one that we see that's recommended the most often is the variable annuity. And one of the reasons why I think that could be happening is because variable annuities have typically the highest commission structure of any of the options that are out there. Basically, variable annuities pay the second highest commissions of any product that an advisor can recommend to you, second only to hedge funds, which obviously is just typically recommended for only a very small percentage of society. So very surprising, right? The one that pays the highest commission is usually what individuals have most often. So we have a problem in our firm with variable annuities, and one of the big problems that we have with them are, of course, their fee structure. Now, depending on the variable annuity that you may have, you're going to have management fees, you're going to have administrative fees, there's turnover fees, sometimes rider fees or mortality and expense fees. When you add all of these costs together, they can add up to be somewhere between typically 3 to 5% per year. We've seen them go as high as 8%. Unfortunately, that is rare, but 3 to 5% is pretty common, pretty typical. So let's say you're just paying 3%, which would really be on the low end on a variable annuity. If you have $100,000 invested in a variable annuity currently, that means that you would be paying about $3,000 per year. And again, it's every single year. So over a 10-year time period, 3% in fees on $100,000, well, that's $30,000 that gets lost. If you have $1 million over 10 years, that means that you're going to lose about $300,000 if your fee structure on your variable annuity is at the low end of the spectrum. So one thing we always recommend when individuals have money invested in a variable annuity currently is to get a fee analysis done. You want to find out exactly what your fees and expenses are. And when you get this analysis done, we have a program that we run that will take a look at what the total fee structure is. Sometimes you can try and read your statement, and you might see quarterly there's some fees coming out, or maybe you can even go to the prospectus and try and read through that document. Usually those are pretty thick and difficult to read through. You can find some of the fees in there, but it's kind of like a cat and mouse game. It's really hard to pin down exactly what your overall cost structure is. So you don't have to search through those big documents or go through past statements. We can find out for you exactly what your fees and expenses are that you're paying. We put it in a simple, easy to read one-page report. We'll put in a percentage amount, we'll put in a dollar amount, and again, we'll total everything up for you to show you exactly what the cost is. Once you know what the cost is, then you can make a decision whether you want to keep that variable annuity or not. Now, the good news is probably about 90% of the time, you are not stuck with that variable annuity. We'll meet with individuals all the time, and they'll say, well, gosh, I didn't realize that the fees were that high, but there's nothing that I can do. I'm kind of stuck. I have to wait another 2 years or 5 years or 6 years because there's going to be some sort of a surrender charge, or I made some sort of a time commitment when I originally went into the account. Again, the good news is probably about 90% of the time there are ways around those, and you can get out of that variable annuity and you're not going to have to incur these large expenses. Now, we cannot avoid these surrender penalties all of the time, and if you were in a scenario where we couldn't avoid it right now, then we can maybe make some recommendations within that variable annuity to try and reduce the overall internal fees, and then just kind of wait out the time period. But that's rare that we have to do that. Probably, again, like we said, about 90% of the time you are not stuck with that variable annuity. There are things that you can do to move that money into something that would cost you a lot less in fees and expenses, so you can keep more of your hard-earned money for yourself. So if you have a variable annuity and you have any questions about how much you're paying in fees and whether or not you can do something different, then feel free to give us a call at the office. We'll schedule a time to sit down and discuss your situation with you.